Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra, and joining me today is Manglam Malu. And markets in a good shape today, going steady. So let's start the show with the top headlines, and then we'll discuss all the individual stories. Stocks perk up with advances outstripping declines despite slowing GDP growth. Adani Group stocks continue their rebound even as metals and realty rally. Energy and FMCG bring up the rear. Mid-caps outperform for the second day.
Stocks reacting to news today. NCC bags 3 new orders worth over 2,300 crores in February. Gujarat Alkalis commissions 700 MTPD caustic evaporation unit at its Dahej complex, while Bank of India hikes lending rates by 10 basis points on most tenures from today.
Garden Reach Shipbuilders gains today. Management tells CNBC-TV18 their current order book is at over 22,200 crore rupees, and they hope to conclude orders worth 3,400 crores by the end of this fiscal. Also expect to maintain profit margin of over 8% in the coming years.
Monte Carlo Fashions gains 2% on bullish commentary. Management tells CNBC-TV18 they have a guidance of opening 45 stores in FY23. Will open 1 store every week in FY24. That's 52 stores for the year.
Okay, those are the top headlines that we are tracking for you. For the markets, absolutely steady. Nifty is up 110 points, and it's the mid-cap side of things which are outperforming the benchmark today. So that index is up around 1.3%. We'll discuss a lot of mid-caps which are in focus on the show as well. The Bank Nifty, which is also higher, so that's the one which is up 0.7%. So good going. Metal index higher after the underperformance that we have seen. PSU banking index also has made a comeback, and IT too. So these are the 3 top gainers in terms of index moves in the broader markets. But after a long time, we are seeing some green on the screen. So let's see whether that sustains or not.
Yes, after a long time, there's green on the frontline end of things. But the mid-caps have been seeing green yesterday as well. And today, the outperformance only continues. Oil India, for instance, up at the high point. AU Small Finance, Samvardhana picking up. So you have more stocks gaining than declining by a factor of 4. We have 2,300 stocks in the broader markets in the green for just about 550 which have been in the red, and that line has stayed steady. That distance has stayed steady between the advancing stocks and the declining stocks from the start of today's trading session. There you have it. The bulls had it at the start of the morning in the market, the broader markets, and they continue to hold their fort. So let's talk about the broader markets itself. The mid-cap movers. We have Vivek to take us through all the mid-caps that are moving around in trade. Vivek.
Well, thank you so much for that. When you're actually looking at the broader end of the market, like you mentioned, advanced decline ratio continues to do quite well for the second straight session running. Specific sections of the market are doing quite well. Innerwear companies, both Rupa as well as dollar, moving up today in very strong volumes. On the back of a news break, that just happened on our channel some time ago, both Dish TV as well as Yes Bank have perked up in the session. The Yes Bank nominees on the board have got the Ministry of Information and Broadcasting approval to come onto the board as well. Moving on, some of the stocks that have moved up on the back of either results or news flow. PTC India on the back of seen a bit of a downtick. It was pushed at the upper circuit. Rain Industries moving up after the results that came day before yesterday, and Inox Wind today too, moving higher, and then again seeing a bit of a correction, even as we speak. Some of the stocks that are doing quite well on the back of very strong volume action. Green Panel Industries, Triveni Turbine, and Poker are moving higher on very strong volumes in today's trading session. On the other hand, some of the stocks that are losing in today's trading session, Bajaj Twins, Bajaj Consumer, as well as Bajaj Healthcare, seeing a bit of a downtick. Spandana Spurti seeing a bit of profit taking, and Lumax Autotech, after the heavy news flow that we saw last week, continues its slide, in this trading week.
Okay, all right, Vivek. So those are a bunch of stocks from the mid-cap space that are in focus. Thank you for joining us with that. For now, we'll slip into a break, and up next, we'll connect with Arun K. Chittalapalli, who's the MD at Wonderla Holidays, to discuss the demand and business trends as well. Stay tuned for that. Welcome back. Looking good for the markets right now, so it's a good time to get a technical check on the markets as well. Samit Chavan of Angel One is joining us now. Samit, it has been a good day so far. Nifty has sustained the levels that it is seeing. What are the next levels on the Nifty? Will we continue this rally, or will there be some profit taking?
Good afternoon. See the kind of price action that we witnessed yesterday in Nifty. It closed somewhere around 17,300, slightly below 200-day simple moving average. But RSI, the momentum oscillator was showing some different picture. We were seeing positive divergence, and clearly the kind of price action today we are observing, it is clearly a result of that particular indicator. Overall, if you see the recent, correction has been financial-led correction. So in last 3-4 days, we have been witnessing some outperformance from the entire financial space, and today also it has lifted the Nifty higher. So next level to watch out for would be around 17,600. So once Nifty surpasses and gives a one-day close also beyond 17,600, that would be a confirmation that from the negative, the tide has turned upwards, and then we can head towards 17,800. And on the flip side, 17,250, 300 should act as a very strong support. So we remain hopeful, and we expect Nifty to surpass 17,600 probably in next week. In the first half itself.
All right. And individual stocks, how would you play the market then through stocks?
See, although Nifty is trading around 17,400, there are a bundle of opportunities that are available in the broader market. Schaeffler India is the one stock that we are certainly liking at current level. Stock has been consolidating since last 3-4 days, but today it has managed to confirm the bullish flag pattern breakout. So which confirms, at least with a near-term perspective, this stock is likely to move higher. 3190 to 3250, these are the next levels to watch out for as far as Schaeffler India is concerned. 3022 can be placed as a trading stop loss. Apart from this, IEX, the stock consolidated of late, and today again the similar pattern that we are witnessing in this counter as well. Bullish flag pattern has been confirmed. If we look at the volume activity, it has risen substantially. Hence, we expect the stock heading towards its 200-day average. So 155 is the target for IEX. One can buy at current level, keep a stop loss somewhere around 143.70.
All right, Sami, thanks a lot for that. We will leave it at that. Let's welcome our guest on the show, Wonderla Holidays. The stock in focus up almost doubled in the last 1 year. The company said it's witnessing strong performance led by increase in domestic tourism, revival of student excursion trips, etc. So to discuss how those trends have fared in the fourth quarter so far, we have Arun K. Chitlapilli, who's the MD at the company. Arun, always a pleasure speaking with you. I remember you telling us, that the fourth quarter is expected to be, as good in terms of demand momentum year on year as the third quarter was. Year on year, of course, the third quarter is seasonally stronger than the fourth one. How has that sustained so far? Are we likely to see the same levels of growth in the fourth quarter year on year as we did in the third quarter?
Sorry, I lost you there. So
I just wanted to know how the growth trends have been in the fourth quarter year on year as against the third quarter.
So I think we are seeing a similar uptick in our footfalls and demand for our fourth quarter so far. So like I said earlier in my last interview, we were hoping that the demand will continue to be strong, and it has shown that. So we are quite happy. Having said that, I think after after this quarter, next financial year onwards, we're not expecting that kind of growth, obviously, because we're starting on a high base. But this quarter is also looking pretty strong. Yes.
Okay, so looking strong in terms of demand, can you give us a sense of how much higher are the footfalls so far versus quarter three? Just a ballpark number here. And have you been able to see an increase in average rent as well, or there has been any pricing difference that you've seen in quarter four?
So in terms of demand, it's kind of tracking what we did in quarter three in terms of demand and how it's going. ARPU and price increases also will track what has happened in quarter three, because last year we had a much lower price. So I think demand and ARPU wise, we are good. Having said that, Q4 is not really it's not the strongest of quarters for us. So we get mostly discounted footfalls from schools and colleges. So ARPU will take a bit of a hit. But at the same time, I think it's because there is still a lot of latent demand in terms of people wanting to come out and for excursions, to outings, day outings, things like that. We are seeing a strong demand, even what is traditionally not a very strong quarter.
Latent demand is perking business up in the fourth quarter in an otherwise weak quarter. But just understanding how the parameters for next year would look like for you, primarily because one, like you said, you will be at a high base. Secondly, you'll be in investment mode for both your Chennai and Odisha parks. Third, most importantly, the latent demand for people to go out may also at some point normalize. So is the best of all these numbers in your existing parks going to be behind the company? If not, at least the growth parameters, what are you gunning for in FY24? If you could give us a sense.
See, because we're starting from a very high base this year, expecting that kind of growth next year doesn't make sense. But
Obviously.
we are still expecting some growth, in terms of, we are expecting at least 5 to 10% kind of footfall growth for the next year. And ARPU increase will be another 10 to 12%. So I think that is the kind of numbers we are looking for the next financial year.
So that means 17 to 18% revenue growth. I mean, assuming all things, fall in place and synergies are a little more than the ARPU plus footfall, 20% growth is what you're targeting.
Yeah, I mean, again, it remains to be seen how it's going to actually pan out. But this is the kind of number that we are internally looking at. But I think it's reasonable and maybe conservative. But let's see. I mean, we don't know how it's going to pan out because it's the first time we're coming out of the pandemic, and all guesses have our guesses.
That's true, because we have not seen the normalized times for such a long time, right? Everything is pent-up demand or revenge buying or revenge demand as well. So yes, FY24 will be important to track in terms of normalcy of demand as well. Arun, in that case, you have, of course, these two parks which are coming up. Any other capex that you have lined up? What is the balance sheet looking like right now? Cash in the books, or will you be taking some more debt just to fund these expansion plans?
So we have a pretty decent cash in the company right now, because we've not done any major capex. We were supposed to start on Chennai, which has got delayed. So this coming 2 years, I think we're going to have most of our capex come back. And so we're going to start with our Bhubaneswar park. We will be spending close to 150 crores there in the next 2 years. Then Chennai will be spending close to 300 crores. And then, of course, sustaining capex for our existing parks, expansions, those kind of things, maybe another 60, 70 crores for the next 2 years. So that's the kind of capex we are looking at.
So, and obviously all of this would be internally funded, right? Because you have usually shied away from taking debt.
Yeah, so we don't think we will need debt for these projects, but then we are also looking at further investments in other states. We've been attending. We've been invited by many state governments to invest. So we are evaluating a few proposals in terms of asset-light models where we invest, with government support. Those kind of things we are exploring. So if that happens, of course, capex will go up again, and at that point we will look at fundraise. We are not shy. I mean, we're not shied away from taking debt because we honestly had the opportunity. But now that we are seeing more opportunities coming our way, we will not shy away from it.
Okay, so in terms of opportunities, would you look at expanding your hospitality portfolio? You have one resort right now. Will you look at putting up more? Because this industry also has seen a lot of demand coming back.
Yes, we are seeing a lot of demand coming back, and I think the number of players in the segment itself is very small. So I think definitely there's a huge latent demand, and people wanting to go out, people wanting to spend time outdoors with family and friends. So those kind of things are never going to change. I mean, of course, the way we work and interact and everything has changed, but at the same time, people's need for entertainment is not going to change. So I don't see that being an issue.
So will you be adding more resorts in that case? That's what I wanted to understand. In FY24, what is the number? What will the capex be here?
So we are planning to expand our resorts by about 30 to 40 rooms, but it will happen over the next financial year, or maybe it will still a little longer as well. But we are currently running almost at 70 to 80% occupancy for our resort. And I think next year also is looking pretty strong. So that's why we are adding rooms. And once that happens, I think we'll be able to increase our revenues there.
One near-term and one long-term question. Quickly, if you could answer that. Near-term is that, with the heat waves, etc., could that impact footfalls if the summer is expected to be hot? That's one. And secondly, you are speaking about, new plants, etc. How long does it typically take for you to break even? And you were also eyeing the management piece, right? When does that start to flow in?
Yes. Yeah, so first question is about the summer. I think for us, usually, unless it's an intolerable heat wave, actually it helps us to, summer is usually good for us. In fact, we don't like it when it rains a lot during summer. I know I'm probably one of the few industries will say that, but for us, heat in the summer is okay, as long as it's not unbearable. And I don't see that happening, this year, hopefully not. So I think demand will be strong. And the second question in terms of the capex, right? And yeah, so the new parks. So we typically take about 24 months, which is 2 years to construct one park. And so, like I said, our Orissa park will be the first one that's going to come on stream, followed by Chennai. We are also exploring management contracts. That is, I mean, we have not really done. We have not signed anything on as yet. We are still exploring.
Okay, Arun, so we'll get in touch with you when there are more updates on this one. Thank you so much for joining us today. So that's the word coming in from Wonderla Holidays. The stock has done well so far this year, higher in today's trading session as well. Let's dip into a short break now. Up next, we'll get your excerpts from our conversation with Ashish Dhawan, who is the co-founder at Chris Capital from the NASSCOM Tech Conference. Stay tuned. Welcome back. Well, on the sidelines of the NASSCOM Tech Forum, my colleague Reema spoke with Ashish Dhawan, who's the co-founder at Chris Capital, and began by asking him about his view on the markets. He's bullish on India and bearish on global markets. Listen into what he had to say.
India is not a cheap market. It's quite fully priced. And so even though I'm bullish on the long term, I think one has to be careful in terms of selecting the right securities, focus on the right sectors. You can't blindly just buy the market, is my own view.
You can't spray and pray.
You can't spray and pray. There's no doubt about that.
What about the global view?
I think globally, I'm actually more bearish than India. I think Indian equities will do better in the next 10 years than developed market. So if you look like the past decade, and Ruchi Sharma writes about this a lot, and I think he's right, that the US really did phenomenally well and emerging markets sort of were waddling around. I think this comes in cycles, as you know. I think in that 2003 to 2008 period was the period of emerging markets. We did much better than developed markets. I think this is the period of EM now. And India being a preeminent EM because China is in the penalty box. So I think we have a real shot at goal.
Okay.
So I think we are better positioned than developed. Developed markets just have too much leverage. That they need to wean off, bad policies, I think, and just the demographics and productivity is low.
You said bad policy for the developed markets.
Yeah, I mean, I'm not a fan of what was done during COVID in terms of spraying money to people, and it was fiscally irresponsible. And I think that just generally, you look at population growth or workforce growth is very low, and productivity growth is very low. So I think the developed world will grow at 1 to 2% in the next decade. And equities, I won't be surprised if you have almost no return out of equities in the developed world in the next decade. Whereas
no return on equity markets in the developed markets over the next decade?
Yeah, I think very low returns to zero returns. And so I think, and bonds also are in a tough place. So I think India, EM will do well, and India could be a shining star.
All right, from IT, let's talk about Tata Motors. Tata Motors actually reported their domestic sales right now. MHNCV sales up 26%. The other CV sales were actually down by 6%. The total passenger vehicle sales, including EVs, have been up by 7%. Total sales actually have come by at around 79,000 units, and this compares with Nomura's estimates of 83,500 units. That's about domestic, but a large part of Tata Motors volumes also come in from China as well as UK. So we'll await those JLR numbers as well as and when they would be reported. With that, we're out of the time on this edition of Midcap Radar. Your stocks comes in when we return.
Co-powered by